Hey, welcome back to Everyday Economics. This is the podcast that you'll learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, December 20th. Joining me as always, Dr. Orphe Divounguy, PhD economist. What is up, Dr. O? Hey, we got some interesting news about the housing market. I believe this came in just early this morning, maybe overnight, but about existing home sales beating expectations. The November 2024 report shows that we're seeing a 4.8% increase over the previous month. Those things happen. But a 6.1% year over year increase, that's somewhat surprising. Just real quick, I've got a fact. I want you to fact check my data because I'm pulling some data in from
Totally.
from
It's
different sources.
It's the National Association of Realtors
Yeah,
comes out with their existing home sales measure. That was yesterday, and that 6.1% year over year increase is the largest since June of 2021.
right. That's right.
Right.
That's right. So according to that same data set, like the average the median existing home price in that measured period was $406,100. We've talked and just like help our people that are watching and listening understand. We've talked about the average home price in the United States being higher. This is the resale, an existing home price, the average of that being 406. That's up 4.7%. And interestingly enough, prices increased in all four regions of the United States. They were all up. So it wasn't like the Southeast was driving this or, maybe the West Coast was driving this, but it was like kind of across the board.
Yeah. So look, this is all to do with mortgage rates. Remember, the homes that sold in November went under contract is sometime in October, at least 30 or 40 days before.
Right. And September, October. Yeah. One of the other probably.
September, October. And so if you think about where we've been, right, we've been on a wild ride when it comes to mortgage rates. At the end of August and September, mortgage rates had dipped a ton.
Yes.
By October, even when mortgage rates began to rebound in October, the typical mortgage payment was still about 9% lower than it was in October 2023. In November, rates continued to increase, and the typical mortgage payment was still 4% lower than in November 2023. So you got a big improvement in housing affordability in the past year, which is why I'm not very surprised that we get this big rebound in existing home sales. Now, the big question is, of course, is that going to continue to last? Is it going to last into the new year when essentially you've got mortgage rates increasing again? You got talks about, potentially policy coming from Washington, D.C., putting upward pressure on mortgage rates. And then, of course, there's also the idea that if people begin to suspect that rates could increase in the future, well, they might as well go out and get a home now, right? And kind of lock it in before the rates go up again. So that's kind of why I think we're seeing this kind of a surprising activity for a November, for a kind of like a slow season in the housing market.
In the last couple of days alone, though, with the, Chairman Jerome Powell signaled, maybe a little bit of speed, some speed bumps ahead, I guess. Maybe it's the nicest way to say it. The 30-year, as of this morning, and again, we're taping this on the 20th of December, 2024. 30-year fix is per Mortgage News Daily, it's 7.14%. I don't want to misspeak, but the last time I called this chart up, I actually found it open, like a browser window that I'd opened, I think was maybe last week. It could have been the week before. I'm kind of sloppy on my desktop. It was at 6.74.
Yeah.
So have we really seen that much of an increase, just this week?
Absolutely. Okay. Everything to do with the Fed cementing the fact that they could potentially reduce the number of rate cuts next year, right? Because of strong economic data and kind of slightly hotter inflation prints. You also have to remember that even though I believe inflation's still going to be moving in the right direction, and I still believe the labor market is heading softer and towards a softer territory. You have to remember that the Fed chair also mentioned that some of the FOMC participants were taking into account what they thought could come from Washington, D.C. next year. And that was reflected in some of those dots on the dot plot. I think that, some people might think to take that into account into their forecast, but ultimately it's just speculation.
Right.
It's a lot of speculation.
Well, forecast. I mean, I guess, one man's speculation is another man's forecast, right? And we did want to talk a little bit about what to expect in the year ahead.
Yes. In the year ahead, look, I think it's all going to depend on mortgage rates. It's clear mortgage rates will continue to fluctuate a lot. We're probably going to get some strong economic data at the start of the year that's going to cause big upswings. But ultimately, I think mortgage rates will ease as we go further into the home shopping season in the spring and summer of 2025. And so, but even with this less accommodating mortgage rate outlook, Zillow forecasts that sales will increase by 2.5% in 2025.
Okay.
Right. So that's pretty good.
What's the drive? What's the driver on that?
I think because we get some mortgage rates easing, right? They're
okay.
Initially, the forecast was for above 6% increase in sales, right? But the increase in mortgage rates basically means sales could increase just less than previously anticipated.
Are we going to get some new houses on the market next year? I mean, obviously we're going to get some new houses in it, but I mean, will we see a noticeable, increase in completed homes sold?
Yeah, no, I think that's going to be a little bit lower. So, remember, we've had builders have continued to build, but a single family housing starts are now 10% below last year's level. So we're probably going to continue to get some completions, but not at the same pace as we had last year or even this year, right? But even with that, the number of homes started this year is still 10% above the pre-pandemic base. So we're still building more homes than we were before the pandemic. On the multifamily, on the apartments, people think about rents. If you're a renter, look, apartment rents had been cooling a lot. But with multifamily starts falling so much in the past year, we think completions could potentially end up 40% lower in Q3 of 2025 than they are today.
And
so the rental market, which was really, really loose, could actually tighten a little bit as fewer homes, fewer apartments come on the market. If less supply comes in 2025. So if you're getting a rental concession today, you may not have it in 2025. You may want to kind of make that move now when rents are low, when asking rents are lower and increasing at a slower pace than in 2025 when there's less supply of apartments on the market.
Well, I appreciate your thoughts as always. I mean, that's a good summary. It's you're handling a lot of data, and you're adding a lot of insights in a short period of time. It's one of my favorite parts about this show. Let's call it good there. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high quality podcasts at americastalking.com.